Hey guys, this is Rhys Trenhaile from the Vanguard Team from Manor Realty in Windsor, Ontario. This is our monthly market update on what's going on with the real estate market and where we see it going over the next 3 to 5 months. With me, not as always, is my teammate Stephanie Ahlstedt. Reed had his third child. So Reed's on, I guess, paternity leave for a couple of weeks. But Stephanie, thank you for joining us.
Thanks for having me.
Yeah, Stephanie's got fur babies.
Yeah.
So, Stephanie, we're going to work with Stephanie today, not just on the market report, but how it involves her specialty, which is buying a house, adding a mother in law suite, and then renting both units out for lots and lots of cash flow or lots of equity gain if you quickly resell the property to another investor. And this is something that Stephanie not only specializes in sales, she also does them herself, right? I mean, how many have you done in the last 2 years?
I think we're at 11 now.
11. So, guys, all 11 of those are all profitable, and they're all ones that you guys didn't want to do.
Exactly. Yeah.
Because either you weren't mentally ready, which is fine, or you weren't financially ready, which is fine, or you were busy doing another one with this. But the bottom line is 11. 11 in the last 2 years that our investors said no to for whatever reasons. And Stephanie said, this is a good deal. I'm going to do it anyway. She's never gone straight out and bought one because she doesn't have to. She just has to wait for all of you to say no. Right?
Right. Yeah.
Yeah. So, yeah, we're not going to get smug on that, right, Steph?
No, not at all. And you know what? Sometimes it takes vision to be able to see past the clutter or the mess or to really be able to see it. And
Yeah. And guys, like we're going to get into the market report in a second here, but when you ask me, is this a good thing? Blah blah blah. Stephanie, I go, look, guys, Stephanie's your Gandalf, right? Stephanie's your Dumbledore. She doesn't look like either one of those guys, but she's your guide. She wants to see you get the ring and beat the evil and win the day, right? Because she has a vested interest in that, which is commissions. So the more successful you are, the more wealthy you get, the more sales there are, the more commission she gets. So yes, from the bottom of our hearts, we want you to do well, but we also want you to do well because it positively affects our bank accounts. So there you go. So she's not going to recommend properties to you that are garbage. Never. I've never seen her do it in a million Sundays.
once my clients buy something, I wouldn't personally put my own money on. So
Yeah, I mean, once every 6 weeks, I have to get on the phone for Stephanie or for one of the other teammates just to say, guys, you're not buying that one because we know it's a dumb idea and it's going to adversely affect you, and then you can't get wealthy. So we'll talk you out of them just as much. So with the market report, guys, residential sales remain constant, which is actually a good thing if you're looking to buy. If you're looking to sell, I'm going to go to the full report for the month. So if you're looking to sell, the whole thing here is, hang on. There you go. So if you're looking to sell, the whole thing here is that the market activity is up 20%, which means there's way more listings because the sales are consistent, right? The sales are the same, but there's a big jump in the market activity. So that means there's a lot more listings for sale. And what you'll find as a buyer is that you are in a much better position. Yeah, see, sales flatlined, right? So you find yourself in a much better situation as a buyer right now than you would have a year ago, or you would have been, or you're going to be in about 3 or 4 months. This is a window in time right now where you can get a really good deal before the next jump. And Stephanie, we were just talking about this before we got on, right? The market is just starting in July to show that uptick that we know is coming because of the interest rate drops that have been happening. I don't like average price. Average price is not accurate. I like median. Hold on. Where's my median? There's my median. So the median, what you can see here, guys, the yellow line is 2024. The red line is 2023. What you can see here is you can see it's going up, right? It went up 5%, 5.5% in 1 month. For point of reference, the Canadian historical average for a year, not a month, but a year, is 5% a year. And you're seeing a jump of 5.51% in a month, right? Start paying attention, guys. Despite all the extra listings getting on the market, the median house. So if 100 houses sold in Windsor last month, What did the 50th house sell for? The one right in the middle. That's what median is. Average, the problem is if one of the local billionaires buys a $100 million house, it skews all the prices on average. It's not as good an indicator as median. So what you're going to see is basically that there's a huge flat line in pricing, and now you're starting to see the spike, right? Does that make sense? So that little uptick, that might not look like a lot to you guys, but it looks like a lot to us because we know that way more listings are hitting the market, and yet prices are going up. And the reason we can tell that is because of this wonderful bar graph here. So this bar graph should be more of a gentle curve here and a gentle curve here instead of what it is, which is a cliff, right? So basically, guys, when you go from 300,000 to 700,000, this is where all your market activity is, right? 300 to 700,000. What this is telling us is there's barely any houses for sale under 300,000, or if there are for sale for 300,000, a bidding war kicks in and it still sells for over 300,000, right? On the flip side, look at that drop, right? You're dropping all the way from 250 sales, more than half of the sales in the market, just under 700, right? And as soon as you hit 700, it's like a cliff, right? Tepid sales. But this is what should concern you here as an investor, is that this is going to keep shifting this way, right? This big bump here, this is going to continue to shift over as interest rates drop. And if you haven't been paying attention, I'll switch to this tab here. This is talking about the mortgage rate forecasts for 2024, 2029. I like having a brief look at this one only because they reference all the top chief economists at the big five banks. And if you've watched other videos, you know I'm a big fan of this stuff. So, Stephanie, I want to know, with everything that we've just said, when we're talking about the interest rate now being down to 4.5, and with the big three banks saying that the interest rate's going to drop another 0.75% through the rest of the year, right? So they expect another drop to, it would be about 3.75. And boy, oh boy, 3.75 really starts sounding and looking appealing, right?
Oh,
How does this all affect what you do, which is you sell houses to investors that add additional dwelling units?
for sure. So, I mean, I guess the key point would be get in now before everybody else does. There's so many people that are waiting on the fence line right now, and they're waiting for another price drop. But as soon as they do that, there's going to be so many buyers on the market that they're going to be competing and they're going to be driving up those prices. So if
I don't disagree, but to a lot of people, they've heard "hurry up or it's gone" from real estate agents for the last 5,000 years. Do you know what I mean?
It's true.
Yeah, but yeah. So how do we quantify it? Basically, we can see that you're right. I guess what people can't see at home is how many of our buyers are just waiting.
Oh, it's true. I have so many, and they're like, well,
Yeah.
I want to wait for that next price drop or that
Yeah.
next rate. But the thing is that 0.25%, even though it's going to save you a little bit on what the payment is, by the time you factor in how much more you're going to have to pay to purchase that property, it's a completely moot point.
Well, we said on the previous video, right, that if you're really concerned about that, like, you've got to understand, guys, that the chief economists of the big five banks have access to more data than anybody. So when they're predicting that the interest rate is going to be down to 2.75 in 2025, and it's going to be down to 2.25 in early 2026, when they're saying that, I mean, my automatic reaction is variable rate mortgage.
Right.
Like, you just ride that slope downward that all the big brainiacs at these banks who have access to more data than anybody else. And we're already starting to see it. Like, we're starting to see that the job market is softening. We're starting to see that the economy in the United States is softening. And I'm not an expert on that stuff, but I do know that's the stuff they've been waiting for to be even more confident about ramping and speeding up the interest rate drops. So, I mean, is that the answer? I mean, because right now, Steph, if I come to you and you convince me to go with a variable rate mortgage and to get an investment, and I'm going to buy this house in, say, Forest Glade, right? And I'm going to add a mother-in-law suite. I'm going to use one of your contractor choices. Am I making a profit right now?
Oh, absolutely. I mean, anytime that you're adding value to the property with it, you're going to be increasing what that potential refinance amount is, what the potential resale value is. Plus, you're taking what was a single family property that only had one source of income to it to now creating two and sometimes even three. A lot of these properties in Forest Glade, you can create a basement suite to them. And then oftentimes they have another garage that you could convert into a third unit as well.
Sure,
So
sure.
you're taking this, purchasing it as a single family, and then creating it into that two or three units.
Okay. So, um, with all these additional listings that we have on the market right now versus normally, right?
Sure.
We've got this big jump in listings. I think it's like 25%, if I'm not mistaken, right? If we've got this big jump in listings, so what does that mean? There's more opportunities in Forest Glade, because I'm used to the Forest Glade houses moving pretty quickly.
For sure. And I think that because there's so many of them that are going on market right now, there's a lot to choose from. And so, whereas in a fast market, you would be able to you see a property that works, you have to jump on it and you have to make it work. No
Yeah,
matter, even if it's not exactly right into the square peg you need, you have to make it work. But right now, at this exact moment, there's options. So we can look at the 10, 15 that are listed right now and
right.
find the one that's going to work perfect for what you need.
I gotcha. So yeah, we're not used to choice. There
No,
hasn't been choice since before the plague,
no.
which apparently I
So,
have right now.
well, before it starts to get really busy and you get all of that competition and everything, you kind of have that moment to actually evaluate and look at all of the properties and find the one that's going to fit just right for you.
Yeah, and I don't recommend trying to time the market, but I guess if you've got lower competition right now and say the ideal neighborhoods for house plus ADU, which to me would be Forest Glade because of the back split, side split nature of the properties, the deep basements around the University of Windsor, which is the West End guys, and then Remington Park, which is near Forest Glade. That would be the other one that's kind of more like Forest Glade. It's got some side splits. What's
You
that?
mean Quantum Blue, not Remington Park.
Yes, sorry. Man, I'm hung up on Remington Park. You're right. Fountain Blue is what I meant. Yes. Thank you, Miss Expert. So those would be the three neighborhoods to focus on?
They're really good right now. I mean, there's definitely some in Tecumseh as well. And
Sure.
proximity wise, Tecumseh is amazing for the executive rentals, right? Because it is quite
Right.
literally a hop and a skip to them.
To
It's
the
just
factories
Tecumseh.
that they're building.
Exactly. So
Yeah.
Tecumseh, East Windsor, and that they do tend to be maybe a little bit newer properties that are there. So the price points might be just slightly higher than when you're looking in an older neighborhood.
But you're
Like,
going to get more in rent.
yes, yes,
Oh,
I get
here's a
more than
question
I
for
will.
you. Here's a question for you. So with these dropping interest rates, so let's assume for a sec the interest rates don't drop.
Sure.
Are we still cash flow positive on these properties once we've done the renovations and we've rented out both units, or are those interest rates too high to make a profit
Nope.
every month, like a
Well,
cash flow?
oh, absolutely. No, they where they're at right now, they do still cash flow with it, and we take that into consideration with our cash flow
But
analysis.
like $200 a month, or is it like $1,000 a month, or what are we looking at?
Right now, I'm finding that on a renovated property with a second unit on it, you're maybe averaging between 300 and 400 per unit that you're going to be profiting.
So $600 to $800 a month.
Yeah,
Okay.
and that's
Okay.
with calculating vacancy rate and maintenance rate
Yeah.
and
Oh, yeah. Yeah. That guys. Yeah. We don't mess around and fudge
no.
the numbers on the expenses when it comes. We do income approach to value like an appraiser. So yeah, you'll get every single real expense. Um,
And
okay.
oftentimes in my cash flows, I'm a little heavy on what the estimations are with it.
So
Like,
those are with normal renters. They're bringing their own furniture, et cetera, et cetera. But if I did, let's say I'm in Forest Glade, I'm an 8-minute drive away from where they're building all these massive world class facilities, research and development facilities, the biggest battery plant in North America. It's all about 8 minutes away, right in Forest Glade. It's all right there. So I could rent out for the next 7 to 10 years to the workers building those plants that are coming in from out of town.
so
So fully furnished units, I'm no longer 600 to 800 a month for 2 units. What would I be? Would I be in the thousands by then?
definitely be. So right now, on average, and that there's a lot of factors with that as to how far away they are, how nice the property is, everything. On average, those guys would be paying about $1,200 per room per month.
Yeah.
Give you kind of just a rough. Some of them, if it's really close, if it's a really nice property, they'll pay more than that. They'll pay $1,300. If it's maybe lacking a little bit or a little further away, maybe they'll pay down to like $1,100 or $1,000.
I was going to say 1,100. I think is the lowest I've heard recently. Yeah, sure. But that was 3 guys in a place that wasn't optimum. They were just trying to find the cheapest place possible.
Exactly. So yeah. I mean, if you're finding something that is close proximity and you put in nice finishes when you're doing the renovations to it, it's going to appeal to those guys that are going to pay a higher price.
Yeah, but what are we? Are we $800 a month? Are we 1,000? Are we 2,000? What are we a month with those guys?
Well, I mean, those ones there, if you're, let's say that you've got a property at about $500,000 purchase price with it. If you're going with a traditional lender fixed rate mortgage at 20% down, you're probably looking at about $2,800 for your mortgage per month with that. Now, if you've got 3 bedrooms up and 2 bedrooms down, so you've got 5 bedrooms and they're going to be at $1,200 a bedroom, right?
Sure.
I mean, now we're definitely looking at, what do we got?
$6,000. $6,000 a month.
5 bedrooms, so $6,000, and then subtract your $2,800 for your mortgage. I mean, that's in the thousands.
So, yeah, so you're easily $2,500 cash flow a month.
Once you factor in the utilities, everything like that. So
yeah, I mean, guys and gals, you can do that for at least the next 5 to 7 years in Windsor.
Yeah, and if it's once the battery plants are actually created there, and it's no longer the people that are actually building it, you are now going to transition to the engineers that they're moving in that are going to be starting to actually work there.
Oh, and the people building the mega hospital, and the people expanding the freeways, and the people building the new exits on the freeways, which you go, oh, what's the big deal? Why even mentioning that? That's over $100 million for each exit.
Sure.
Like, these are big construction projects over and over and over and over. And when you build the North America's largest battery plant, guess what, guys? You get a ton of plants coming around that plant, partially because you can't transport battery parts too far because of their fragility. So they've got to have the other plants that support that plant around that hub. That's why when Windsor landed that plant, everybody just went, not just here. It was a bombshell through everything, economically speaking. I'm not going to get into that again, but Windsor's going to double in population over the next 15, 20 years. It's insane. Okay, we're at 15 whatever minutes, so we're going to wrap it up. But I think in a nutshell, guys, it's the calm before the storm right now. It's the end of the calm. And right now you can kind of window shop a little bit where you haven't been able to for years. And Stephanie knows which properties to take you to and which properties to tell you no, you're not buying that, so that you can maximize your profits and start generating wealth. So Stephanie, thank you for joining us today.
Thanks so much for having me.
That was the market report for Windsor, Essex and real estate. I'm Rhys Trenhaile with the Vanguard Team. She's Stephanie Ahlstedt from the Vanguard Team. Thanks for joining us, guys.
Thanks.